Our coverage from ICICI Securities Conference in Mumbai. We have Abhijit Mitra, the Vice President, Metals and Mining and Defence of ICICI Securities, joining in to talk to us now. Abhijit, hi. Thank you very much for taking the time out. First, wanted to start with talking about Tata Steel, because it seems as though the sale for its UK assets now seems to be crystallizing. What's your call on the stock, and especially maybe post a stake sale?
Yeah, so we are positive on the name. We feel that it is one of the few names in the sector where deleveraging is independent of the commodity cycle. So we, currently remain constructive on the name on the longer term basis. And we feel, and probably this is the only stock on which we are constructive in the metals, in the ferrous space, so to speak. So yeah.
Abhijit, hi, morning. Let's talk about the defense because that's what we're talking about right now. I think you have some of the stocks under coverage as well. How big is the defense opportunity, and in terms of listed stocks, how will you play it?
Yeah, so defense, as of today, remains largely concentrated, among the few names in the listed space, which would amount to Bharat Electronics and Astra Microwave and Solar Industries. Some of the other, capital goods major and auto major, so to speak, like L&T and Bharat Forge. So these are the names in which majority of the investor interests are, to know what things are happening and how things are going to progress as we move forward. As far as the opportunity scope is concerned, yes, it's every year we are spending close to 65 to 70,000 crores in capital acquisition, new capital acquisition, so to speak. So on a yearly basis, that's a huge number. So the opportunity will always remain very high in this space. How much of that percolates down to the industry player is another area of discourse, though. So that's where incremental research needs to be done.
Okay. How would you approach Hindalco? It's had a good run so far this year, but it's now corrected over around 10% just in this month.
Yeah, most of the non-ferrous names, have been, been impacted by the weakness in the LME that we have seen over the past 1.5 months. So the correction has been in line with the outlook in the non-ferrous metals, so to speak. Currently, we are more positive on the ferrous space, so to speak, vis-a-vis the non-ferrous space. So yeah, that's how I would play it.
Okay, just let me get back to the defense stocks. All the stocks that you mentioned. Solar Industries for me is the one that stands out. Why do you like it in particular, since you have a coverage on this one and your price target?
Yeah, so we have a buy on this name. I think one of the key, so it has been historically an explosive manufacturer, venturing into the defense space of late. It's kind of forward integrating, so to speak. Though there are other nuances which I'm choosing not to speak about right now, but definitely, the defense opportunity for them looks big. Management has themselves guided about, anywhere between 500 to 800 crores of top line over the next 3 to 5 years, depending on the amount of investment that they decide to do. And it's also something which can, replace some of the imports which is happening in the country. So from a current standalone explosive manufacturer moving on to defense, and then creating that kind of a top line with an asset turnover of 1.5 to 2:1.
Okay.
That's where the hope thing lies. Yeah.
Okay. Okay, Abhijit. Thanks a lot for your time, and we wish you luck with the conference. Well, we'll end the show with a look at the advanced decline ratio. Let's just keep an eye on that, because it's the mid-cap market which is seeing brutal correction. I mean,